Hey everybody, this is 𝙁𝙊𝙇𝙑𝙀𝙍, and we are live in our very first town hall as part of the Roundtable series. And a town hall basically is something where we get together as a group of individuals and talk as Americans. I really want to chat just like we would chat if we were showing up, at our local town hall in our local community. And I'm joined by a very special guest, first time guest on the program, one of the moderators of the channel, business owner, and super fan of Gold, Silver Pros. It is Michael Sayre. How are you doing today, Michael?
Great. How are you doing?
I'm doing very well. We also have another very special guest logging in. It is going to be Mr. Financial Fitness. We'll let him get himself sorted out. And we're going to let people load in the chat before we get into the discussion today. I wanted to let everybody know super chats are open. If you want to super chat and really grab my attention, you can do that. Also, put your questions in the chat and we will answer as many as we can. This is a town hall Q&A, so we want everybody to ask their questions and we're going to answer them to the best of our ability. The theme is what's going to happen to America's economy next year. Is it going to survive? Is it going to crash? Looks like Financial Fitness is in. Chris, how are you doing today? You're live
with
us on Gold Silver Pros.
I'm good, brother. Good, glad to be here.
Good to see you. I popped on your show this morning. I know those videos are going to go out later, but I had a great time talking to you. And it was good to meet you at Silver Symposium in Idaho.
It was great. It's always good to be around like-minded people. That's why I go to those things. Silver wasn't exactly the most exciting thing at the moment, but meeting you guys is always fun.
So Chris, meet Michael. Michael is one of my moderators and super fans. He runs a business out there in California.
Hi, Chris.
Hey, Michael. How you doing, brother?
Good. How are you?
There you are. Good. Y'all are crooked. I don't know.
I think you're the one that's
I'm the crooked one.
That's all right. We'll get it sorted out. All right. So everybody, this is going to be a live town hall. First in the town hall series, relaxing series. We're all going to be drinking a beer. I got my Michelob Ultra as always. Just chatting about what's going on. Guys, post your questions in the chat. We'll answer them. I want to start off with, I got a couple of charts. I'm going to leave this kind of light. I don't want to get too much into the data, but I wanted to start off the conversation talking about something very interesting I saw on Zero Hedge today. So I saw this chart, and this is from FRED, which is the Federal Reserve's database coming out of the U.S. Bureau of Economic Analysis. And the notations are done by Charles C. Smith. If you don't know who he is, go to of2minds.com. He does great writing on the economy. He's talking about the share of gross domestic income. That's the chart. And you can see that the employees used to have over 50%. This is back in the 70s. And now they've got about 42, 43, 44%. And what Charles is saying here is that the capital markets have siphoned $50 trillion from workers between 1975 and 2018. This is a type of wealth transfer from average everyday American to the big capital owners, the super rich. I wanted to get your guys' opinion on that. Is that a healthy thing for any economy to happen over a 50-year period, for the rich to get richer and the working class to earn less and less and less?
I'd say no. I mean, you could ask a few of the countries that have had, revolutions in the past and civil wars, ask people if they want to eat cake,
Marie Antoinette said that.
Yeah,
right?
Exactly.
Let them eat cake.
Yeah. Ask Louis the 16th, France. Perfect example of the bourgeoisie, having all the money and the peasants having nothing and revolting. And I think that's it's historically definitely not a good thing.
How long did that last, Michael? I mean, before basically the peasants revolted?
I don't think it lasted very long. I mean, I don't recall exactly how long the French Revolution was, but it was quite abrupt and unexpected, I think, by most people in the world.
So what's your thoughts on that, Chris? With this wealth disparity, leaning toward the super rich, the owners of the capital in the society, what does that mean for them?
Yeah, for those of us who have assets, we're doing great.
Yeah.
The problem is the people that I work around, the people that work for me, the people that are everyday, build America, the people like that are going to get absolutely crushed by this. And that is there. If you don't have those things now, you're never going to. Wealth will only be inherited. It's no longer going to be able to be created. You know, America's always been that place you could come to as a nobody and be somebody. It's up to you. You know, it's up to your, you know, to your discretion. However hard you want to work is what you get rewarded for. You know, and now everything's so manipulated. All of it. It's a house of cards. Yeah. I was looking at your chart right there. Really small on my phone.
Well, it's just a chart of how much a share of the domestic income in the U.S. is owned by the workers. It's fallen 10% in the last 50 years. And that amounts to 50 trillion over those 50 years that were taken essentially from the middle and lower class, the working class, and given to the capital owner society, the rich. And that's not typically a good thing. 50 trillion is a lot of money.
When did that start? I didn't catch.
In the 70s. Yeah. If we put that chart back up, it started in the 70s.
I'm curious if that's around the time that 401ks and the idea of retirement accounts where employees were forced into the stock market to invest their future retirement instead of the company having, you know, a pension plan. I'm just wondering if that coincides, because when you tell people that they have to put their money into the stock market, where most people don't even know what they're doing in the stock market. I can't even say I'm, you know fully what I'm doing, but I have, you know, educated guess that a lot of people are going to lose money because they're not going to make the right decisions. And so that money is going to be siphoned out of people's retirement accounts, or their retirement accounts are not going to grow the way that they should because more money is going to the top.
I think that's a good point. And I think it's a really good point, because it used to be, and I was talking with Chris about this on his show this morning. My family grew up during the Great Depression. My mom was born in 34, my dad in 24. My dad went to the war as a Navy, in the Navy as a medic, and landed on D-Day. So they went through that time in American history. And from that time to about the 60s, America built incredible wealth, incredible prosperity. People were independent. You know, they support each other, but they could be independent. You grow your own food, things like that. And then somewhere in that 60s time frame is when these types of things started coming about, where it was the thought that you work for a big company the rest of your life and you get your 401k or a pension and then you retire. And people lost that ability to do for themselves. And what happened was all that money that went into the pensions, which were investing in stocks and bonds, and into 401ks, which are investing in stocks and bonds, the same stocks and bonds, is that the people that own those companies that the employees were investing in got rich, but the employees didn't. Why? Because there was a crash every 4 to 10 years. And it's that crash which destroyed people's savings. And so people could never get ahead. And that's why most people can't retire today. The vast majority of people cannot retire who are reaching retirement age. And that's a big problem.
I find that impressive, man. You're holding up pretty good. Your parents went through the Great Depression, and they must have.
I wasn't surprised. My dad was 50 when he had me, so I'm much younger than all my siblings.
That's pretty good. They you know, back then a carpenter could support a family of 4. They could have new vehicles. They had, you know, and we entered this. You've got to go to college, or you're going to be a burger flipper. You've got to, or you're going to dig a ditch, or that time has come and gone. The people that are going to college for underwater basket weaving and just stuff that absolutely doesn't matter, they don't have jobs. The guys I went to school with that went to college, I make more than, I would say, 90% of them. I'm a welder. Your other buddy probably didn't know. But I'm a real estate investor. You know, I'm an investor as well. And we're entering a different, we talked about this earlier, about it's going to be about what you can do. What is a service you bring with you? What do you bring to the table? Are you bringing food, or can you weld? Can you work on vehicles? You know, can you make something? Can you grow something? That's what we're entering into. It's the beginning of it, but I can really see it becoming a, you know, I don't want to say third world, you know, there's a lot of doom and gloomers out there, and I'm pretty optimistic about the future, but the short term is going to be a little bit painful, I'm afraid.
I do too. And talking about the short term, we had a comment from Matt Bailey in the chat. He's asking as we reviewed the Treasury General account, basically how much money does the Treasury have left? And he says it's only 77 billion and it could run out by the end of next week. So, you know, if they don't deal with the debt ceiling issue, we're going to run out of money. My thought is that's not necessarily a bad thing. I mean, it'd be a bad thing for people who live off government benefits, but it's not a bad thing for those of us who would like the government to shut down and just stop passing stupid laws and stop spending money. And any thoughts on that? Is it going to be a good thing if the government shuts down or a bad thing?
Man.
I mean, I would say that personally, I think they should just remove the debt ceiling in general. And that isn't to say that I think they should spend all the money that they want, but they're using it as a weapon, both sides, to get what they want, to make a statement, to stay in power. That's the reason why they never get rid of it, because whoever is in charge when it comes up can use it, and whoever is not in charge can use it. So whether or not, you know, we don't have a debt ceiling, I don't know whether or not it would, if these people decide that they want to continue this process of spending money, it's not going to go well. I mean, if the country defaults on its debt, we're all screwed. Let's be honest. In terms of temporary, the dollar, our purchasing power, the way the world looks at us. I mean, we're already, in my opinion, certainly not looked at the same esteem that we were 50 years ago, you know, and that certainly wouldn't be helpful. And having it play out in the global arena is not making us look good either.
Yeah, I agree with you.
I kind of feel like I'm early. We usually are, the people like us. But I don't think letting this thing fester for much longer is going to help. I think the longer it goes, the worse. The more it metastasizes, the harder it's going to be to get over. But there's never a good time for that to happen. You know, and there's never an opportune time to start over. You know, complete currency reset. You know, I can't imagine. I really can't. It's going to be crazy. It's going to be, when everything does bad, I don't care if you got gold and Bitcoin and everything. When everything does bad, it's all bad. You know, it's going to be really, and who knows if it's next month, 6 months, a year, 5 years. I mean, we don't know, because they have pushed this thing down the road a lot farther than I thought they could have. You know, me and you and Peter Schiff and all, you know, everybody.
Yeah.
I don't, that's kind of where I sit on it. I don't think there's a good time.
Yeah, I agree with you. I think we pushed it down the road because we, as a society, looking at myself as part of it, you know, we're deathly afraid of what would happen. And I think the politicians said, we don't want to be the ones responsible for putting an end to it, because they knew what would happen if they put an end to this system. Everybody knows this system, you know, once we got past 90% debt to GDP, according to Kenneth Rogoff and his Harvard buddies who did that book, there's no society that's ever not crashed. We're sitting at 130% right now. We're so far past the point of no return. And one of the things that's manifesting out of all that are prices. So I've got another Zero Hedge article here. I just went to Zero Hedge. Just got, you know, today they're on it on Zero Hedge. They're talking about producer prices. So this is how much it costs a producer to get its goods to produce something for you, whether it's going to be the clothes on your back, whether it's going to be your vehicle, whatever the case may be. And analysts, according to Bloomberg, think that we're going to hit an all-time high in producer prices. So 8.6%. So you see, this is a spike they're predicting that's coming. 8.6. And you see the spike from where we were. Here's the pandemic. Here's the start of 2021. Here's your baseline right here. Draw a line right through here between 2 and 4. They're giving me more than double that at 8.6. And then if you look at core PPI, which is, you know, another measure, it's 6.8. So all of these prices in the supply chain are absolutely just exploding. So inflation's coming. And we said this at the beginning of the year, we said producer prices are, commodity prices are up, producer prices are up, inflation's coming. People thought we were crazy. People came to my videos and said, yeah, I don't see the inflation. I said, trust me, it's coming. And now we're starting to see inflation, and now we're starting to see producer prices go up. That means tomorrow our bread costs more. Tomorrow the car we want to buy costs more. The computer we need, you know, for our kids to do their homework is going to cost more. And I've said this for like 2 months now. I don't think this is going away. What are your guys' thoughts? Michael, do you think inflation is going away?
No, not at all. I think the ironic thing is that the Fed and our government officials, you know, they love the word transitory, although now they're kind of backing away from that. But they want to paint inflation as something that is good and not going to be a big deal. But the ironic thing about it is that they desperately want the inflation. They need the inflation. They need to inflate all this debt away, or else we will default because we just don't have enough money coming in. They need the prices to go up. They need people to be paying more taxes. They need all these people to make more money so that they can tax, you know, more money. Because this is all a chain. It's when prices go up, people need to afford more. When people need to afford more, they need to be paid more. When companies pay more, it costs more. When things cost more, you raise prices, and it just becomes this cycle. But what is crazy to me is that the Fed secretly needs this. They secretly want this. And I say secretly because it's not what they say to people, but it's the truth. And the sad part is that 99.999% of the country, the world, is completely oblivious to why they need it, but it's going to happen.
Chris, from your perspective,
I'm kind of wondering.
You run a business, Chris. How is this affecting you? Have you seen inflation in your business?
Oh yeah, box of welding rods. Last box of welding rods I bought was $222 for 50 pounds. You know, that's just, and they don't want to. And that's welding. I do these natural gas well hookups, and I do them when they come up. It's not. I enjoy doing them. It's fun. I'm getting out of it now, but the pay's not going up. That's the. You know, it's a stagflation type of thing. All of our goods that I have to bring with me with Taylor Welding are going up. And when I talk to the, you know, they don't want to ever come off any money. I've never worked for a contractor that ever made any money, but it's really strange how inflation's starting to go fast. You know, I say it all the time. And people, my listeners usually get tired of me. They probably get tired of me saying it. 90% of the move is in the last 10% of the time. It's just like going broke, real slow at first and then all at once. Mm-hmm. And you can put our chart over the the Weimar Republic, the Weimar Germany chart. It's the same. You have these real crazy run-ups, and then there's these little hope phases where it kind of calms down. Then you have these run-ups, and then it kind of calms down. But then it at the very end, it really takes off. And I don't know if you've ever been through the book When Money Dies. Has either one of you been through that?
Mm-hmm. Yeah.
Oh, you have? Okay. Well, man, to me, that is an excellent playbook because it sounds just like Jerome Powell Jawbone. It's the same verbiage. It's the same, inflation's not a big deal. Mm-hmm. We can print as much money as we want. You know, don't worry about it. And they've already talked most people out of gold and silver. They've showed them it's not any good. It only goes down. You want the dollar. You know, that's most people. That's what they're used to. They tell me. I had a guy tell me the other day. I try to poll people everywhere I go. I talk to people. I'm like, hey, are you paying attention? You see what's going on? No. You know what the petrodollar? Do you know what the petrodollar is? Nobody knows what the petrodollar is. Do you have gold and silver? No. I said, man, I want to encourage you to get a little bit of gold and silver. Well, I saw him again about a few days ago. I said, did you get you some gold and silver? You getting ready? He's like, you were saying that a year ago. I said, yeah, I sure was. I was telling you to get a gold a year ago and silver. And he said he was sticking $500 under his mattress. That's the person that's going to get hammered. Mm-hmm. And he's a good guy, but he's more worried about fishing on the creek and going to football games and stuff like that. Right. But it's showing its ugly head, and it's not tranny inflation. It is not. They've got two bullets. They've got inflation. They've got QE, and they've got raising interest rates, and those are gone. Now we're down to the empty lies, and they've got magazines slapped full of those.
And that's why every time the Fed comes out and says, we think we're going to do this, we're thinking we're going to do that, but they're not doing anything because they can't do anything because they're stuck. Yeah. One of our longtime viewers on the program, Dumb Money Media, has posted a question in the chat. And he says, what do you think minimum wage should be, or the average wage of the worker should be, to cope with prices today? So, for example, I'm going to date myself, but when I was working in high school at the grocery store, I made $3.35 as minimum wage. And at least back then I could afford my car and my insurance payment and my gas, which wasn't too bad, as a 15, 16-year-old. Now I would say just to survive and have basic living arrangements and a vehicle and all that and clothes for work, he's saying he thinks it's $30 an hour. I don't know if that's right, but what do you guys think? What's the minimum you can make every hour just to survive now?
I mean, I'm in California, so that number might be completely different from a different state. I mean, just where I live alone, I mean, there's probably a one-bedroom apartment is probably at least $1,500 to $2,000 a month minimum. And, it costs more here, gas costs more. So being self-employed, I really don't know, but it would have to be far more than 30 here in California just to get by.
30 an hour? 30 an hour?
That was what he suggested in the chat, but
okay.
But I don't even know if that would be enough here. I really don't think it would be.
Whoa. Yeah, I'm not a very good person to ask. I don't think the people that do have all the money are paying their employees enough. I understand that people, it only works if the numbers work, but I don't know. I really don't. I don't have a clue. I know $15 an hour. I could make it on $15 an hour.
I probably could in Texas, but you know what? It would be a very minimal lifestyle. It'd be a one-bedroom apartment, never eating out, just the basics, right? An old beat up used car. I could probably survive on $15 an hour, but that would be pushing it.
My helper makes, when we work for this one gas company, he makes like 16, I think. And it's just, man, I can't hardly watch it. It's like, we find him side hustles and stuff to do, but it's just it's just broke. Everything is broken. And that's those kind of people really, they suffer really bad. They're suffering now, and they get ingenious. And he's a Mexican fella, and he's a super good guy. And they eat a lot of beans and a lot of fillers and a lot of carbohydrates and tortillas and stuff that's very inexpensive. And they live very frugal.
Yes.
And they have a party. If they have 2 cents to rub together, they'll have a party. But I don't know. That is a really good question. I don't know who asked that question, but that is I'm not sure. In the middle of inflation, when everything is going up, a bottle of Clorox is $5.50.
Mm-hmm.
I think an interesting way to look at it is like, let's take his $30 an hour example. That's what, $60,000 a year, roughly double. You assume taxes take at least a quarter, after, and I'm not talking about just when you file with the IRS of the state, I'm talking about sales tax, I'm talking about everything. That gets you down to 45, assuming you want a 1-bedroom apartment here and you don't want to have roommates, that's another, 20,000, I mean, the number starts getting lower and lower. And then we're not even talking about what we mentioned earlier, which is retirement. You have to put money away if you want to stop working in the future. And I mean, if you're even, let's say you're even saving 20, 30 grand a year into your retirement accounts, and even they manage to get 10% a year, with inflation and the costs of everything going up, 30, 40 years from now, if you want to retire, that money's not going to get you.
You got no chance at that point.
Yeah, it's you don't. And so if you wanted to say if that's a minimum wage, well, what are we talking? Are we talking about so that you can live? Are you talking about so that you can plan for the future? To say nothing of children, college, all those things. I mean, I'm with Chris, it's broken. There is just very little way for people to make and save money that will allow them in the future to not have to do that for the rest of their life.
So I got one more article for you guys. This is President Putin was asked by CNBC's 𝙂𝙊𝙇𝙑𝙊𝙎 whether oil could hit $100 a barrel, and Putin said, sure, that's quite possible. He says, we're not trying to allow any shock peaks in prices. It's not in their interest to allow that, even though they're a big oil producer. But he says, yeah, we could hit $100 a barrel. What would $100 a barrel do to the average truck driver or the average taxi cab driver, anybody that depends on, oil for their job or for,
I mean, I'll let Chris this one.
Yeah, that is, I'm in fossil fuels for a living. I think $100 a barrel, there's two problems with that. $100 a barrel is probably on the low side. I can so see $300 a barrel. And the other problem is it's denominated in dollars. So 40% of the dollars on the earth were created this year. So there's no telling if they print that many more next year. You can't denominate things in dollars. So what would it do to the consumer? The end consumer is going to eat that. The truckers are going to have to get more. Everybody's going to have to get more. They're going to not do it. They're not going to be able to. So they're going to raise prices on that. That is an inflationary pressure on the already struggling supply chain that's already getting inflated, and it's going to pass to the end consumer. So that means everything that the truckers are carrying is going to go up, and it's going to start small at first, and it's going to get worse. That's the way inflation works. It's the way it's worked everywhere else.
There's one commenter in the chat, Neil Hahn, who says he makes $45 an hour. It's $90,000 a year, and he says he can't afford to buy a house. So I guess it depends. A lot of it depends on where you live. Depends on how expensive things are. Our house, which we're in the process of selling, that we've had for about 8 years, has almost tripled in value since we bought it 9 years ago, 2012. So about 9 years. It'd be 9 years in December. Tripling in 9 years, which for Texas is out of the ordinary. Texas, typically real estate doesn't do that well, but I think because it's doing that well, I see a gigantic real estate bubble in even Texas. I mean, you see them in California and the East Coast all the time, but now you're starting to see real estate everywhere. I don't know how people afford a house nowadays. It's one of the reasons we're selling. We're going to sell high. We're going to take that money and wait for a better opportunity. Partly because the real estate we pay have gotten out of control. But it just, I don't know how people buy houses nowadays. I don't know. Even an apartment here in Texas, a decent apartment's $30,000 a year. So if you make minimum wage, you're not, you're going to have 2 or 3 roommates, I think.
Yeah, I would agree. I mean, the only question I have is whether or not we really are in a bubble in certain areas, because I mean, here where I live in California, it's pretty built out. It's been built out for a while. I mean, I have a friend who lives in San Francisco, and yeah, it took a dip during that time that everyone, not everyone, but a large amount of people started working from home and left San Francisco. But the price has actually gone back up past what it was before the pandemic, because, for an example, San Francisco there's no space left.
Yeah.
So, the bubbles I found after 2008 tend to hit the areas where they built tons of homes that were much farther away. I mean, you had people here commuting an hour and a half, 2 hours to San Francisco for work, because the only place that they could afford a house back then was that far away.
Mm.
And so those areas were hit the worst. I mean, those are the areas that had homes that were empty, squatters, all that kind of stuff.
Mm.
But even where I bought my first home, which was about halfway in between, that area is so built up that, that's where a lot of people live for affordability now. And I don't see the housing market collapsing in that area. They're not building a lot, and there's not a lot of supply. But I can see it happen in other areas that where a lot of Californians and other Americans move to, Texas, Idaho, these other states, where all of a sudden there's this influx of people and they're building like crazy. That's kind of what happened in 2006, 2007, is they just built.
Yep.
And there was just too much.
Well, for me, I have a small line of rental houses, and we're selling them right now. I was on the phone today trying to sell them. Historically, and this has to do with your viewer's question, historically, over when food prices go to 40% of a man's paycheck, that's when people don't pay rent.
Yeah.
And that's going to be the problem going forward. And the situation we're in now with owning a house is going to be, are you going to make the note, or are you going to feed your family? That's where we're at. And I know I sound doom and gloom, but this is just kind of the facts, looking at us. As far as buying a house right now, I think there's going to be deals in the future. I think I would save my money and probably save real money, God's money that he put in the ground for us to use, instead of fiat currencies that are backed by zero. So and my plan in the beginning with my rental properties, see, the richest man in Germany, I can't remember his name at the moment, but during the hyperinflation, he bought shipyards. He got a loan for everything he could get a loan for. He watched them blow up the currency, and he paid it in currency that they were burning for wood. Yeah. It was cheaper to burn currency than to buy wood. And he ended up being, and I had that thought going into it a few years back, because I've been watching this thing, most of all of us have. But the problem is the markets might ask, we're different. Our situation's a little bit different because we're the world reserve currency. And I don't think, Weimar is the closest thing we have to look at. And that's why I've been studying that. But as far as buying a house right now, making $45,000 a year, man, I would wait. I would just wait and rent and be ready, be nimble, hold some silver. And it's very possible. Silver, we're looking at triple digits in silver, I think. And you might even speculate on some cryptocurrencies. We're in a different situation. These things, these assets I'm talking about could very well go parabolic in this crisis, in this money crisis we're about to have.
Yeah, I agree with you. Before we get to final comments and wrap up, I did want to preview what we're going to be doing Monday on the channel. It is Mining Stock Mondays on our channel on Gold Silver Pros. We got another one, which I'm going to do a deep dive on Monday for those of you that like to invest in the mining stocks. A lot of our followers do. Ultimately, Mining is an emerging mid-tier Mexican mining company. They have two projects, one producing in Campo Morado and another one that they're getting the data together on 𝙁𝙊𝙇𝙑. They're cash flowing about 9.1 million on Campo Morado mine, and 𝙁𝙊𝙇 has high grade gold. They've already got 30 million invested in exploration, under construction, nearing production at 1,000 tons per day. So that one's going to be coming online. They expect commercial production by 2022. And this is going to make them one of the larger mining companies, gold and silver mining companies in Mexico. It is a polymetallic mine. We talk about that all the time on our channel, polymetallic mines. That's where gold and silver is going to come from. The primary metal mines have basically all been found. So we're going to have to go after these mines that are volcanogenic massive sulfide, VMS, that have gold, silver, and base metals, and 𝙁𝙊𝙇𝙑𝙀𝙍 is one of those. You can see here at 𝙃𝙀𝙀𝙍 how they're building this facility. It's almost built out. And again, here's Campo Morado. We'll do a deeper dive on that one, guys, on Mining Stock Monday. But wanted to share that with you as a preview. So final thoughts for you guys. I'll start with you, Chris. What's your final thought? The question was on this town hall, is American economy going to survive another year? Do you think it's going to survive? And if so, what is it going to look like a year from now?
Man, that's a is it going to survive? Yeah, we're going to survive. Have something to eat. I would say have some food. Yes, we're going to survive. The people that are prepared are going to do what Americans do. We're going to endeavor to persevere, and we're going to, when we get down to the bottom, if you're not part of the problem, you'll be a part of the solution. And we're going to start building a ladder when we get down to the bottom, and we're going to climb out of this hole. But as far as this year, I'm so wrong on timing. I can't answer that. I'm like the worst at timing. Mm-hmm. So I don't know if it's tomorrow or a year or 2 years. I kind of feel like 6 months is going to show us a lot, though. I think in the next 6 months, maybe even 3, I just feel like time's running out, but I can't put a date on it. There's just too much happening so fast. Mm-hmm. And I already thought it should have went down maybe, earlier this year, but 3 to 6 months, we're going to start seeing some fireworks, I think.
Michael, what are your thoughts on the American economy? Where are we headed, and where would we be a year from now? In your thoughts? I know you're a business owner, so you may have your ear to the ground a little bit more than most.
Well, I'm kind of with Chris on this in that, trying to predict when it's going to happen is really difficult. I definitely think that our economy is not headed in a positive way. I mean, the Fed alone has already reduced GDP estimates down to practically zero for the quarter. Mm-hmm. And they, all these predictions keep saying, oh, but it's going to increase. And it's, well, where are the signs that it's increasing? Every sign is showing us that things are decreasing. Stimulus has ended. People are demanding more for their wages and not entering the labor market. These companies are taking on massive debt. We have to keep interest rates low, or else these companies will go belly up. So I don't know when exactly things might break, if they will break, or maybe it will just be a slow decline over time. But I think that the best thing that people can do is to save in sound money and to be prepared. And I'm also with Chris about food. I have stocked up myself. I was just at the grocery store several days ago with my cousin, and she hadn't been in a while, and half the place had to have been empty. Mm-hmm. Now, I'm not saying all grocery stores are like that, but she even said, what is going on? And I think that a lot of Americans are very unaware of the supply constraints, all of the things that are going on that are going to happen later. I don't know when, but I do believe that at a later time, things will break. And those who are prepared are going to survive it, and those who are not are going to have a pretty tough time.
Yeah, well, hopefully we'll be able to help. That's the thing, is if you can help other people, because there's going to be so many other ones that aren't ready. They're not even close. They've got 3 days of food. That's the.
I think a good to go on that is, when the pandemic, when all the lockdowns happened and everything, it was hard to find most food. I mean, and that was when supply chains were not where they are now. I remember when there was that second round of toilet paper ran out, mm-hmm. and I had already stocked up on toilet paper, everything else. And when everything ran, I almost laughed at how predictable it was that the moment people start freaking out that something will not be on the shelves, they will rush and they will get it. And it's completely reasonable to think that gold and silver are the same thing, but people can't rush to the store and just go buy it. That, you know, when it becomes apparent that the world economy is shifting and that gold and silver are going to be, you know, a big component of that, people are going to go running. And you want to have financial toilet paper, you know, you want to be ready.
Yeah, Michael, 𝙃𝙀𝙍𝙊𝙎 said, when this thing happens and everybody runs to gold and silver, it's going to be like fitting the contents of the Hoover Dam in a garden hose. And that's about the best analogy I've heard. I think you're absolutely right.
Yeah, I completely agree, because I remember right before that second round of toilet paper shortages and I was slowly stocking up, I would go to Costco and I'd get there in the morning and almost every cart would have some sort of toilet paper. Yeah. And the toilet paper was in the back of the Costco. So it meant that people got to Costco and the first thing they did was go to the back and get their toilet paper. And I only mention this because if people knew that, you know, these central banks, these governments are buying gold, they are doing what those people did with toilet paper. They are stocking up because they know at some point there will not be much left. And I completely agree with Chris, you know, that's what it's going to be like. And people are not going to be able to find it.
And I agree with you. Those supply chains are broken now. Before that wasn't the problem. The problem was a flash mob went to the store. They bought everything. For some reason, toilet paper was on the top of the list. And when it breaks when something happens this time, if you didn't learn your lesson from the pandemic, I'm sorry. That was a warning shot.
Yeah.
I agree with you, gentlemen. Thank you so much for being on the program. We got one last quick announcement before we sign off. We're going to be in New Orleans at New Orleans Investment Conference next week, 19th through the 22nd. I'm not going to be presenting at this one. I'm just going to be holding networking events. We have a special event Wednesday, October 20th at 7 p.m. where we are going to discuss with investors, share information with investors on tips for investing and how best to invest and what investors' wants are. And we'll have a lot of companies there in the precious metal space that you can talk to as well if you're interested in getting into the precious metals. Good way to connect if you're an investor into the precious metal space. We're going to be giving a special 10-ounce bar of silver giveaway in a raffle, courtesy of American Pacific Mining Corp, who has sponsored this event for us. Thank you so much, American Pacific. Free beverages, free hors d'oeuvres. If you're interested, go to this link, which will be down in the description, and sign up. It's going to be limited seating. We're only taking 10 investors, and the deadline for signing up is tonight. We'll choose everybody tomorrow, and then we'll see you guys there next Wednesday at New Orleans Investment Conference. Thank you to Michael for joining the program on our very first town hall talking about the American economy. And also thank you, Chris. You can find Chris at Financial Fitness on YouTube. Great channel. You'll see me coming to his channel pretty soon. We did a good long discussion today on his channel. So I'm really looking forward to that. Thank you so much, Chris, for inviting me to that.
Absolutely. I'm glad to be here, Rob. Thank you.
And thank you, Michael, for being such a great fan and a great friend and being our moderator in the chat and all the things that you do for Gold Silver Pros. We appreciate that as well.
Yeah, definitely. Thanks for having me. And if anyone wants to follow my Twitter, it's 𝙃𝙀𝙊𝙍98.
That's right, 𝙃𝙀𝙊𝙍98. And you're going to get your updates on now the COMEX. He's doing a series on COMEX. He was doing a series on how much precious metals is moving every day. Now he's got a series of data and charts on the COMEX contracts, which is I find very interesting.
Yeah, it's fun to watch.
I'll see you there, Michael. It's nice meeting you, buddy.
Nice meeting you too.
Thank you guys so much. We will see you next time. Appreciate it. Remember, next week, New Orleans Investment Conference. I'm going to be pre-recording a bunch of content for the channel next week, because next week it's going to be 4 days of us doing interviews with everybody that we can find, and stay tuned to that special content, which will come out after we get back. Everybody have a good evening.
Thanks.
Later.